Hi, I'm Ann Rosen with Keller Williams here in Chicago. If you're shopping for a condo, there's one thing many buyers don't realize. Not every building is easy to finance. It's not just about whether you qualify for the loan. Sometimes the building itself doesn't qualify. This can create big surprises if you're not prepared. So today, let's talk about why some Chicago condos have trouble getting approved, and more importantly, how you can avoid falling in love with a home you can't actually finance. First, let's talk about rental ratios. In a condo building, lenders like to see a healthy balance of owner-occupied versus rented units. Why? Because they believe when owners live in their units, they're more investing in maintaining the building and community. If too many units in a building are rented out, lenders see that as a big risk. Imagine a 50-unit building in River North where 40 units are being rented. From a lender's perspective, that looks more like an apartment complex than a community of homeowners. What does that mean for you as a buyer? It could make it harder to get a traditional mortgage or limit the pool of lenders willing to finance your purchase. The takeaway: always ask about the rental ratio before you get too attached to a unit. Second, pending lawsuits. This one catches buyers off guard all the time. If the condo association is tied up in legal disputes, maybe with a contractor over construction defects or with a resident over building rules, lenders usually hit pause. Why? Because lawsuits introduce financial uncertainty. A big settlement could mean higher association fees or special assessments down the line. I've had clients find their dream condo in a beautiful historic building in the Gold Coast, only to discover the association was in the middle of a multi-million-dollar lawsuit. Financing was basically off the table until it was resolved. So don't be shy. Ask up front, are there any pending or recent lawsuits against the association? Number 3, low reserve funds. Let's look at the reserve funds. A well-run condo association sets aside money every month to a reserve fund for future maintenance. Things like a roof replacement, elevator repairs, or exterior work. If reserves are too low, lenders worry the association will suddenly need a special assessment. That's when all owners get hit with a large bill, sometimes thousands or tens of thousands of dollars to cover urgent repairs. For example, I've seen buyers discover a condo they loved had reserves of just a few $1,000s for the entire mid-sized building. Lenders immediately flagged it and buyers had to walk away. This is why reviewing the condo's financials are so important. A strong reserve fund equals lender confidence and a smoother transaction for you. Number 4, maintenance issues. Major maintenance issues like deferred maintenance. Chicago is full of older buildings, some charming, some historic, but not all well maintained. If a building has a falling roof, unsafe balconies, or outdated mechanical systems, financing can be denied until repairs are completed. Lenders simply don't want to finance a property that could turn into a liability. A real-life example, a South Loop building with crumbling balconies was flagged by an inspector. Until those balconies were repaired, buyers couldn't get financing and several contracts fell through. The lesson: always check not just the unit itself, but the condition of the entire building. So now finally, let's talk about non-warrantable condos. This is the industry term for buildings that don't meet Fannie Mae or Freddie Mac guidelines. It could be because of rental ratios, lawsuits, low reserves, or even commercial space in the building taking up too much square footage. Buying a non-warrantable condo isn't impossible, but financing it often requires a larger down payment or a specialty loan, and not every lender offers those. So while you can still buy, it's critical to know upfront whether the building is warrantable or non-warrantable so you can plan your financing accordingly. So what's the big takeaway? When you're buying a condo in Chicago, it's not about finding the right floor plan or the right neighborhood alone. It's about making sure the building itself qualifies for financing. The good news is an experienced agent will help you spot these red flags early before you fall in love with a condo that can't be financed. I'm Ann Rosen with Keller Williams here in Chicago. I'm here to guide you to the right property, not one that's just a smart investment, but also a smooth closing.